Hey folks, CA Rachana Ranade here. Today's podcast is going to be different. It's going to be really interesting because we are not going to start our podcast with our guest today. I'm going to start the podcast with you all. I'm going to utter a word and you have to tell me which word comes to your mind when I say these following words. Ready? Okay. The first one is mutual funds.
सही है.
Chorus answer is sahi hai. Okay. Now if I talk about stocks.
Profit.
Growth, wealth,
Profit, growth, wealth. Interesting. Third, bonds. इतना सन्नाटा क्यों है भाई? Because that's exactly what happens when it is about bonds. There are so many people who really get confused when it comes to bonds. Many people say that's not my cup of tea. But I think this is a very, very interesting investment avenue which can truly help you to diversify your portfolio. So today we are going to talk about bonds not only from the issuer's perspective. We are not going to talk only about from the investor's perspective, but we are going to understand about the whole ecosystem. We have a guest whom you may not have seen on social media, but he has worked in this area of capital markets, bonds for almost 2 decades. So we are going to learn a lot about this space, very interesting space of bonds. So sit back, relax and be ready for an educational podcast. Alright, so let's get started. I have with me a very special guest. Why special? He's a chartered accountant, right? So we have a lot of things in common, We both are chartered accountants. We both are from Pune and we both have been teachers. He has also taught CA students, so have I. So let me take this opportunity to introduce CA Girish Lakhotiya. He is the one, as I was mentioning, who has spent a lot of years in this whole space of capital markets. Girish, but from being a chartered accountant, many of them actually want to pursue a practice, maybe in the field of taxation or in the field of auditing. Did you also start with a traditional practice?
Yeah, I did had some experience in auditing, but it was, really when I was preparing for my CM final exam that I read about finance. And I realized that, it is so much relatable to the real world. And I really fell in love with finance.
Okay.
And that's when I decided that, anything happens, but I'll just pursue my career in finance.
Okay.
So immediately after returning, I took a detour. I went for industrial training, got my first job in Citibank, which is kind of a dream job for a lot of CAs.
Correct.
Even got promoted within the first 9 months.
Wow.
But still, I was not satisfied being a small part of a big machine. Quit Citibank, came to Pune, got into teaching, taught CA students financial management.
Actually, you taught, we used to call that as MAFA. Then
FM.
SFM. Achha.
That is in final. But I used to
you taught CA intermediate students.
Intermediate,
Okay.
So, did that and then parallelly I was practicing, then got into debt syndication where I was helping my clients raise funds from banks, financial institutions. And in 2017, then I decided that, from being arranger of finance, we will become provider of finance. And we formed our own NBFC. The journey continued from there. Then in 2022, we started our own AIF CAT2, which is a debt AIF. 2024, we got license as a debt broker. With permission to...
But I think, wait, we'll pause here. For others, it will be like, oh my God, this is like a machine gun. I'm sure many of them may not even know what is AIF CAT2. AIF is an alternate investment fund and CAT2 is basically a category 2 alternate investment fund. But I think you could be in a way better position to explain in a layman terms for debt what could be a AIF CAT2.
So AIF, you can just simply assume that it's a smaller mutual fund where people are pooling money together and then deploying the money. The investment manager is then deploying the money in local businesses. So in CAT2 AIF, basically you can also invest into unlisted securities and other instruments.
Amazing. So becoming a chartered accountant, starting your own practice, being a teacher, and then being a key part of the Prachay Group. If you can just tell me what all offerings do you have under the umbrella of Prachay Group?
So Prachay Group, I would say, is a complete debt ecosystem which addresses the business finance needs of mid-sized businesses. So we have a RBI registered NBFC. We have a SEBI registered CAT2 AIF, which invests into unlisted debt debentures. We have a debt broking license from SEBI with a permission to operate online bond platform by the name of BondSmart, where we help businesses raise money by way of listed debentures. And investors, we give access to investors by this route.
Oh,
So this is a complete debt ecosystem. Any requirement for growth finance of a mid-sized businesses are addressed under this. And to top it all, we just don't give money. We give advice also. We
Okay.
tell the promoters on how debt should be used in business and how it will result into positive economic results.
oh, fantastic. So if I were a businessman and if I were to raise debt, would you advise me on whether I should go ahead with something like a listed debenture or a listed bond or an unlisted, or is just a loan enough for me? Would you also do that?
Absolutely, absolutely. And this is a journey.
Okay.
Because not every business is that organized to go for listing.
True.
So it's a journey wherein you start small, you honor debt, you take term loans, then you go for unlisted debt, create a investor base, and then finally you go for listed debt.
Absolutely. So, Abhi, when we started the whole podcast, when I asked them all these words, stocks, they gave me an answer, mutual funds, they gave me an answer. When I said bonds, full sannata. No one was really, maybe the reason is that people still don't know that what exactly a bond is. Bond बोल के James, नहीं, इतना फालतू नहीं मारूंगा. Sorry, James bond नहीं करेंगे, ठीक है. Anyway, but people don't understand what a bond is. So, you being a teacher, you have taught CA intermediate kids on what is finance, financial management. So, as if there are kids who are watching this podcast, if you were to explain them simply what is a bond, how will you say that?
So, it's very simple, basic instrument. Say, for example, you want to start your own new business and you want to raise money from owners,
Okay.
people who are taking risk along with you. So, for that, you issue equity shares.
Correct.
So, similarly, when you want to raise money from lenders, किसी से उधारी पे पैसा लेने का है, the instrument that you issue is debenture or bonds. So it's as simple as that. For equity shareholders, it is variable return. They're sharing in the risk and they'll share in the returns.
Correct.
For debts or debentures, it's fixed return.
Exactly.
So even if your business is doing very good, you will have to pay the fixed amount. Even if it's doing bad, you will have to pay the fixed amount.
Correct. So that you are explaining what is a bond. In simple words, it is an instrument which is going to give you a fixed return to the investor basically, irrespective of how the business is performing. Like you said, even if it is in profit, the investor cannot say, okay, bhai, if you want so much profit, give us more. वो नहीं होगा. But even if the business is not doing well, still that person
That's how debt works. That's how leverage works.
Right?
That's how leverage, and that's why it's risky.
Correct. But from the investor's perspective,
Yeah.
if an investor were to gauge that when should I invest in bond, for what type of goal, or when should I invest it, in simple words, what would your answer be for that?
So I will say the key is in the words fixed income.
Correct.
Corporate bonds, they are called as fixed income securities. तो जब भी आपको कितना पैसा चाहिए और कब चाहिए,
Correct.
ये दोनों आंसर्स आपके फिक्स्ड है. Here I am investing this because I need this money at a particular date and this much amount is required.
Correct.
So when the return or the timing is
Correct.
fixed, you should go for fixed income securities.
Absolutely. So it will be like, I am not really worried about, I just know that I want, let's say 1 lakh rupees. On this day, I want it come what may.
Yes.
If that is the case, I want it.
Yes.
In that case, could this be a good
Absolutely.
investment?
Say for example, if we explain it by way of example, you're saving for your son's college admission.
Okay.
So you're sure that you need the
When
money.
do you want to take the admission?
Say 2 years, 3 years down the line,
Okay.
you're very sure that
Okay.
he would need say 5-10 lakh rupees and you're saving for that.
Okay.
So if you're invested into equity markets, the returns might be volatile on the date of admission or the month of admission. But when you're investing into fixed income securities, that is relatively fixed.
Absolutely. But then, you said that you started with a practice, normal auditing taxation practice, and from there to having your own NBFC called as Prachay Capital. I agree that yes, you told me about Citibank and this that, but starting your own NBFC, I mean that's too. I mean, मेरे imagination के भी बाहर है ये. What actually motivated you to do all these things?
So always the intention was how we can work in a manner where businesses get easy access to finance. So I have been passionate about this cause where I believe that we have great businessmen in India,
Correct.
great entrepreneurs, but what they really lack is appropriate and adequate capital. So always the intention was कि businessman को जिस चीज के लिए और जब पैसा चाहिए उस चीज के लिए मिलना चाहिए. So the journey from advisor to NBFC to fund and now debt broking, everything is about that how we can improve access to capital for businesses.
Okay. But then let's take an example. Let's say a normal company is wanting to raise money. How do you assess ki if I am a businessman and if I were to come to you and I would say that I need, let's say, 20 crores of money for my own business. I can imagine a Shark Tank scene right now where you are the shark
Not at all.
and I am wanting to
We
raise
invest much
funds,
bigger
right?
amounts than sharks.
So okay, right, absolutely. So it's like 20 crores are not like lesser than that is what he's saying. But then in that case, how do you assess whether that company should be really getting these funds, or are there some criteria that you would look at?
Basically, it's much more than just criterias or algorithms. Basically, you need to have expertise on two aspects.
Okay.
One is business finance. So, how money, when used in business, will result into cash flows. So, you need to think like a businessman, because unless you put yourself in his situation or in his seat, you'll not understand what he is planning.
Correct.
So, first is business finance expertise, where you actually understand how the money will be used in business, how it will generate economic activities and cash flows.
Correct.
So one is understanding of business finance, and the second part is understanding how money works, or how debt finance works, or how banking works. So how to structure that, like how to structure the disbursement of your loan, how to structure the repayment of your loan.
Okay.
So all these things are involved. So it's combined expertise of credit as well as business finance.
Wow. Okay. So you're saying it's really important from the mid-size entrepreneur perspective that they get the money when they want to, because that is like a fuel to the business, right? If they get money on time, that is the time when they'll be able to fulfill whatever plans they have in their pipeline and actually execute them to the best possible level.
Absolutely. I call it like businessmen should get adequate and appropriate money. जितना चाहिए उतना भी मिलना चाहिए, और जिस तरीके से चाहिए उस तरीके से मिलना चाहिए.
Correct.
Only then money really
What do you
works.
mean by किस तरीके से?
Actually, what is, the requirements of businesses are unique. So the debt should actually be addressing the actual requirement.
Okay.
What happens right now is most of the institutions, they are very massive, they're big. There has been a massive consolidation in the banking industry. So they are tailor-made products. So if you fit into those guidelines, you will get money. If you don't, you will not. It should be the other way around. I call it clinic loans, where you really understand the financial health of the business and then infuse money to cure the problem or to solve the problem.
Wow, very interesting. That is solving the problem of the entrepreneurs. But what about the investors? Because when investors are investing in bonds, what general people understand is credit rating, right? And when it comes to top rated bonds, then hardly they're going to get any interest. I mean, what, 7, 8%, 9%, bahut ho gaya. And then people will say, Arey, if it's like 1% or 1.5%, 2% higher than FDs, might as well keep my money in FDs, which I know what it is and I would get it when I want. So if an investor were to go to investing through bonds or maybe some other instrument in the debt market, why would that person, is there any case where I could get a double digit return? And
absolutely. So as I was telling you earlier that most of the top rated corporates are right now accessing debt capital market.
Correct.
Our wish list is that companies who have rating below AA, they get access to capital debt markets or corporate bonds. So we will bring these industries. I will not call them lower rated, but I'll call them underrated, because these are good businesses supported by good, led by good promoters, having good fundamentals. So when these companies will come to corporate bonds, when they'll issue their corporate bonds, they'll give higher yields. So we want to create a separate asset class, which is high yield bonds. Wherein you will get returns in double digits. So these are real returns post-tax and post-inflation.
So you're saying that there could be cases where a company could be giving a double-digit return and could be comparatively safe. I'm not saying absolutely 100% safe, but comparatively safe.
Absolutely.
There's a possibility for that.
Absolutely. So a similar kind of study was done in the 1970s in the US, which Michael Milken, he is known
Okay.
as the father of US bond market, he pointed it out.
Okay.
There, the thing was, he was talking about junk bonds, which were
Okay.
below triple B minus.
Uh-huh.
But as I was telling you, in India, the definition of junk bonds is below double A. So there is a risk return skew there. The returns which are being offered on those bonds are higher compared to the actual risk.
Got it. Got it. But then again, I'll come to the same example. Me as a businessman, is there something that you feel that as a businessman it's difficult for me to get access to finance pretty easily? So I'm not talking about those who are already big
Yeah.
companies. For them, I'm sure is getting a loan from a big bank or something like that is going to be extremely easy. If I'm talking about a very young entrepreneur who is just about to get started, maybe there are some government schemes also, something like a
Yeah.
mudra loan or whatever. But I'm talking about the middle zone, who is neither a very big businessman nor an extreme starter. Do you feel that they do have a pain to raise money through debt?
Actually, they are the most under-addressed segment of the pyramid.
Oh.
If you'll see, government has a lot of schemes. Even banks are supporting the smaller businesses, the lower strata of the pyramid. And the top corporates, they always had very easy access to banking finance as well as capital markets. The middle layer, mid-sized businesses, what we call, they are nobody's primary focus. And that's where we want to make a change.
Okay. But I mean, in this case, how would you look at it? Why do you think they are not really in the limelight? What are the pain points for them? Why are they not able to raise capital very easily?
So, there are a lot of factors to it.
Okay.
Why they are not able to do, because first, if you'll see the amount, the kind of funding that is available. If you're a mid-sized businesses, the only finance that is available to you is through banks.
Okay. So taking a bank loan.
Bank loan.
Okay.
And banks have their own norms. So your every requirement doesn't fit into their norms. So
Okay.
raising money, say for example, you want to grow faster than the rate of accruals. So then bank finance actually doesn't make much appeal to them.
Okay.
The second thing is collateral. If you want to
Okay.
raise money from banks, you need collateral.
Absolutely.
So if you have family assets, then it is very easy. But for a first generation entrepreneur, it's very difficult to raise money.
Correct.
And we don't have a developed bond market. So you don't have any other access apart from banks for mid-sized businesses.
Wait. Now you just mentioned something that we don't have a very developed bond market.
Yeah.
That itself is a big question in my mind. Like when it comes to mutual funds, I think the distribution of mutual funds has, become extremely amazing. I think the Mutual Fund Sahi Hai campaign actually took the distribution of mutual funds to a next level, or awareness, I must say. I can also take some credit on behalf of the content creator economy, that I think we also help people understand this concept of mutual funds, and it has really come out really well. If I'm talking about shares also, the awareness is pretty much high, markets are also pretty much mature. But when it comes to bond market, that is still not, I think, very much, I will not say mature, but it's not easily, I don't know what word do I use here, but if I'm talking about retail individual investors and their access to the bond market, they investing in the bond market, that is not, which is very common, that is the right word that I was missing on. Why is there such a big friction when it comes to bond market? Because I'm sure in countries outside India, bond market may be way more mature than what it is in India. Where is the problem? Why is it not so in India?
So, I also find it very interesting. When I came into the bond industry, even I was very surprised that why this market is not very developed.
Correct.
Because debentures and equity, these are two basic instruments.
Correct.
Even mutual fund is a derivative product.
Correct.
But these are two basic instruments.
Absolutely.
One instrument has developed a lot.
Correct.
You have one of the highest valued market in the world, equity market in the world, whereas your debt market is not really developed. And if you'll see what is the size of equity market in India, it should be somewhere around 400 plus lakh crores, 425 to 450 lakh crores. And the size of corporate bond market in India is hardly 55 lakh crores.
Oh, is it?
And in other Western countries, typically the corporate bond market is twice the equity market. And we are just, 1/10 or 1/8 of the equity market. And I would say, mutual fund industry, what it was 30 years ago or 25 years ago, at the same junction, we have corporate bond industry in India right now. It's growing at a massive space. And the regulators are also giving a lot of help to develop this.
Okay. So as a retail individual investor, if I were to invest in bonds, okay, now like you said, because the viewers do pick up important lines from whatever you are saying. Like you said right now, that where mutual fund industry was maybe like 25, 30 years ago, that's where we are in the bond market right now. So if this were to really be a good investment in my portfolio, in that case, as an investor, whenever any bond comes into the market and I see that as an opportunity to invest, what all factors should I be checking before I decide ki isme invest karna chahiye ki nahi, should I really invest in that or not?
So,
I will be a little bit more specific, okay? What retail individual investors understand is one thing, which is credit rating.
absolutely. I was coming to it. I was coming to it. So right now, what is the situation of bond market in India is everything is basically, run on credit ratings. The moment you say bonds, the second question which will come to is the rating, external rating.
Correct.
And if you'll see the actual picture, 97% of issuances, corporate bond issuances in India are AA and AAA.
Okay.
So basically, our market is very limited. It is only having access to the top corporates.
Correct.
So the smaller companies are right now not accessing corporate bond market right now.
Okay.
So that is one problem. And
because they are not getting good credit rating, is it?
yes, credit rating is a limiting factor. Investors are not willing to invest anything below AA.
Okay.
Because the general perceived thing is anything below AA is junk. So I'll bring this definition. In Western markets, the definition of junk bonds or non-investment grade is anything which is below BBB minus.
Okay.
But in India, anything which is below AA is treated like junk. People don't want to touch it.
Okay.
And anybody who understands a little bit of credit rating would simply tell you that, unless you reach a particular scale of operation, you cannot get into the A club. So right now, the doors of capital bond market or capital debt market are restricted for smaller players. They don't have access to it.
So you are saying that if I were a company who has a good capital base, so size, when you are saying a big sized company, are you saying only based on the capital?
Yeah, capital, size of operations, revenue.
Okay.
All those factors are there.
Correct. So
scale of operations.
Scale of operations.
Yeah.
If that is big, then I have a chance at least to get an A-rated bond in the market. But let's take an example that I am a comparatively smaller company, but my revenue has grown, let's say like 100% YOY, or let's say even a 50% YOY. Of course, I understand the base is small, but still I'm a fast growing company. My profits are growing nicely. I am having a positive operating cash flows. My debt to equity is absolutely in check. Everything is in place. Still no chance of me getting an A for if I were to raise money in the debt market?
So it would really depend on the credit rating agencies if they give you the right rating or not.
Okay.
AA and AAA. But unless you have that rating, the doors of capital markets are relatively restricted for you.
Okay.
So that is the case. So what we are trying to change here is because I am also first generation finance entrepreneur. I've struggled with this credit rating. So we are trying to change the narrative. So this industry was earlier credit rated industry. So depending on the credit rating, you would be basically deciding to invest or not. We are trying to change it into credit underwritten industry.
Okay.
So for example, whatever bonds we will try to sell, we will first invest into them. We will underwrite it, we will structure it, we will monitor it, and then we will recover if required.
Okay.
We'll act in recovery if required.
Skin in the game.
Skin in the game.
Okay.
So from credit rating to credit underrated.
Okay. So again, if we were to explain this, because I'm sure many people may not understand this. So let's say I'm talking about my company. My company needs to raise capital.
Yes.
I want to raise capital by issuing bonds. And let's say it's a total issue of 20 crore rupees. Is that a size? Typically, yes, 20 crores ka ho sakta hai.
Anything.
Okay.
There's no restriction on
there's
that.
no restriction on that. Okay, perfect. So I come, let's say to your NBFC, I say that I want to float a 20 crore worth bonds. So do you also help me structure that?
Yes.
Okay,
Yes.
you will structure that.
Yes.
I would then sell it in the bond market via whatever the issuers and all that. But then would you invest in my bonds?
Yes,
Is that what you're saying?
Yes. So what we'll do is we'll understand your business requirement,
Okay.
how you're going to use the funds. We will decide how much funds are required, and a certain percentage of that, say 15%, 20%, we would be investing.
Okay.
And only those bonds will try and take it to the investors for investing. So they might not have trust on you per se if they don't know you, but because a known player who understands this segment and who is putting his own money
Correct.
is investing with them. So it will become easier decision for them.
Got it.
Of course, it's just at the idea stage, and it will evolve as we go further. But we believe that this is one of the answer from our side for helping the small mid-sized businesses get access to capital debt market.
But then again, like you said that okay, a company will come up with the bond, you would also invest in that. But for a layman investor, right now, if the layman investor says, I know only one thing, credit rating.
Yeah.
So, like you said, there is a very less chance that I may get a credit rating. Let's say I go into the AA or a AAA category. If you were to convince, or if I were to myself convince कि अरे अच्छा है मेरा bond, what all factors should I be telling the retail individual investors that check all these factors as well, and then you may say that okay, it's not that bad also.
Look, expecting the retail investors to really understand those details about a business, basically the business model of the company or the leadership of the company. These are various fine parameters. So you will have to rely on a matured credit player who understands how this works. And then it would be an easier decision for you to invest along with them.
Absolutely. Got it. All right. Talking about one more point, right? When it is about the overall bond market, I'll first relate it with the capital market or the stock market first. When it comes to stock market, a lot of factors play in. We say about what is the overall GDP growth. We talk about what is the interest rate cycle, how is the geopolitical scenario. So many things that impact the stock market.
Yeah.
So if I were to talk about the bond market, what all external factors actually impact it?
All the similar factors, because a business is exposed to these factors otherwise also.
Correct.
But what you need to remember, and debt is cheaper than equity. That is the basic thing that we say in finance, we don't understand.
Correct.
So debt is supposed to have lower risk. Why something would be cheaper? That investors are willing to take lesser returns for the same amount of risk. So if anything is cheaper, it would have lesser risk. So if you're investing into the equity of the company, you might get larger returns also, but your money might also get lost.
Okay.
But when you're investing into bonds of a company, unless the company fails completely, it goes into bankruptcy or the entire equity is wiped out, till that time you're relatively safer.
Okay. Is there something like an interest rate cycle or something like that which can play on the bonds pricing and all that?
Yeah, but Indian markets are really not that matured for interest rate sensitivities.
Okay.
When you have a very deep market where buying and selling of bonds is at a higher levels, then you will have investors who are aware of how interest rate changes are affecting. So it is basically, a fight between expected return and the actual return.
Absolutely. Talking about Prachay again, let's say there's a company whom you help to raise money through unlisted bonds. Again, from the retail individual investors perspective, because my major audience is retail individual investors. For them, what is the minimum ticket size
On unlisted bonds?
Yes.
I don't think so. Unlisted bonds, the retail investors can only have access to them if they're getting through private channels. Otherwise, they have access to only listed bonds.
Okay.
So listed bonds, you can have access to them on various online bond platforms.
Well,
there are more than 50 platforms in the country right now. So you can buy from any of them.
Okay. But for unlisted, you are saying ki, it has to be through a private channel or someone who is actually raising.
Yes. Say for example, the businesses can raise money by way of unlisted bonds in its own financial ecosystem. So any business which operates doesn't operate in isolation. They will have some vendors, they will have some employees, they will have some customers.
Correct.
So you can develop your own ecosystem. So that's where unlisted bonds are really helpful. But if you want to raise money from public at large, then you'll have to go for listing.
Absolutely.
So you have two options there. One is private listing and one is public listing.
Okay.
So public listing is where you're going out in the open and you're raising money from public at large. You're coming out with a public issue. It opens, closes. Those all formalities are there. Privately listing is a relatively simpler process.
Got it. All right. So talking about the overall geopolitical scenario right now, there are so many things happening in the world. In such cases, do you think that bond market, if it were to develop in India, could that help us build strength in our country and to combat the overall position? See, I'll tell you what context I'm coming from right now. Okay, unfortunate scenario, but a truth that yes, we do have a lot of wars which are going on in the world. To actually tackle those wars, it's not only about the power on the front that we need to combat the enemy. But I feel that the economic power is also something which is extremely important, because if we are talking about our neighbors, for them to fight a war itself is a big question mark. You need money for all these things. So do you think a bond market can actually help us in building the overall economic strength of the country? Is there any connection, or am I stretching it too far?
No, definitely bond market, I'll say it's the only solution for Indian economy.
Okay.
I'll go to that extent. I'll explain my logic for that.
Okay.
So, for a large period of recent history, there has been peace. So after Second World War,
Correct.
there has been relatively a lot of peace in the
Correct.
world. And we've moved towards an era of globalization from 1990 onwards. But right now, the geopolitical situation is very tense.
True.
Apart from the actual wars, you also have economic wars with tariff, everything going on. So given the situation, the inflow of money from outside India might be a bit restricted for another few years. It might not really, flow. If you'll see in India, presently the businesses are funded by banks. They are the major financiers. They are also struggling with their own liabilities.
Correct.
So they are also not able to give the impetus on credit growth as is required. In this scenario, if we have a robust bond market or a very well-developed bond market, what will really happen is direct channelization of investments into businesses, which has the most economic impact for the entire ecosystem. So when your money as an investor is directly invested into a business, so what happens is employment gets generated.
Correct.
There is production which adds to the GDP. You pay taxes. Those taxes are used for the welfare of the society.
Correct.
So the entire economic cycle starts when you make an investment by way of bonds, because the money is directly flowing into businesses.
Correct.
Most of the noise that we even hear in the equity market is around the secondary market.
Correct.
So I am really, very bullish when money goes directly into businesses. Either it's way of IPO.
Correct. Because even if I'm talking about stock market and primary markets, we have seen a lot of IPOs in the recent past where it's more of an OFS rather than a fresh issue.
Yeah.
So even if it's an OFS, no money is actually going down in the company where maybe the production capacities may increase, production will increase, top line will increase, profits will increase, more employment generation. वो wheel नहीं जाता है वहाँ पे.
तो इसी को मैं बोलता हूँ कि कॉर्पोरेट बॉन्ड्स का इन्वेस्टमेंट एक सुलक्ष्मी वाला इन्वेस्टमेंट है. जब आपका पैसा कहीं लगता है और उससे इतनी इकोनॉमिक वैल्यू जनरेट होती है, तो जो आपको रिटर्न मिलता है, दैट रिटर्न इज आल्सो मोर बेनिफिशियल.
Absolutely. So till now we have learnt a lot about bonds. In fact, I just wish I had a notebook with me. I would have taken down some notes as well. But I'm sure that everything can't be goody, whatever. Any investment which is giving me a little bit more return, I must say that some risk will be associated with that. We have learned that in CA, with high risk, we get associated with high returns, and with low risk, low returns. That's a normal funda that we use in financial management, right? So, I mean, the big question that people have when they invest in bonds, कि क्या मेरा पैसा डूब सकता है? Can I lose my money? How does it work with bonds?
So absolutely, if the business fails, if you're equity investor or a debt investor,
correct,
your money will also get lost if the business fails. But the only difference is debt holders will get their money before the equity holders.
Correct.
So at least you're slightly covered over there.
Okay.
But if the business fails and say for example even after selling off its assets it's not recovering sufficient amount, so say for example you will get 25 paisa in a rupee.
Okay.
But the entire money will not be lost.
Got it. But I mean, would this happen even in case if it's a secured bond also? If the business fails?
Yeah, because in secured bonds you have certain assets. So you will have to liquidate those assets, recover money and then pay off the bondholders.
Got it.
So if you do not recover adequate amount, then the bondholders will get lesser amount.
Got it. But like we said right now, that is risk associated with only bonds or any instrument, any investment instrument?
I'll simply say, because we want to make our audience aware, anything which is above risk-free rate of return. Risk-free rate of return is what you are earning on government treasury bills.
Correct.
As you move away from that return, which should be somewhere around 6-7%.
Correct.
Anything that you move away,
so anything you are moving
of the
above,
instrument,
anything above 6 or 7%.
Yes, anything that you have above, you're going above that, the risk is increasing.
Absolutely.
No need to, even say anything. Risk and returns go hand in hand.
Absolutely. So, like you said, it's not only bonds which are exposed to risk. Any investment avenue which is fetching you more than 6 or 7% return, anything above the government security,
You're assuming the risk.
You're assuming the risk.
Yeah.
Fantastic. Wow. So much to learn from this podcast. As I mentioned, right after this podcast is edited, I'm going to also take some notes. I'm sure you all also found a lot of value in today's podcast. What I'm going to give him as a homework and his team as a homework is that whatever questions you have, if you feel that okay, out of 10, 8 of my questions got answered in this podcast, and if you feel I still have a doubt or a two about bonds, please let me know your doubts in the comment section below. I will tell his team, right, to solve your doubts, because the whole intent of this podcast was to make you all aware about the whole bond market. Thanks a lot,
Thank
Girish,
you.
for
Thank you,
taking
Rachana.
out time and helping me educate our viewers
pleasure is
on bond market. Any closing thoughts before we wrap up today's podcast?
So just the same thing that, your portfolio should have a balanced allocation to various asset classes. Corporate bonds is a very interesting asset class. It gives you fixed income. So you can definitely allocate some portion of your portfolio to bonds.
Perfect. Thank you so much for these insightful discussion, and thank you. I'll see you in the next one. Till then, take care. Jai Hind and bye bye.